member of steering committee. Yes. Shall I move with M to M? Let's start it from the very beginning. Okay. So you can stop the recording and restart it again if you wish. Good afternoon, everyone. In this virtual National Tax Conference from 23rd to 25th August, second day, 24th August. And we are in our noon session, that is 12 to 1. Today we have our eminent speaker, Prasanna Dantri sir, with us. So a brief introduction of Prasanna Dantri sir. It's my great pleasure to introduce such an eminent personality, Prasanna sir. He is PhD from Deccan University, PGP, FPN from Indian School of Business, ICWA. He has completed his BCom from Mangalore University. Presently, he is Associate Professor of Finance, Indian School of Business. Has been Assistant Professor of Finance earlier also from 2019 to 2021. And he has been Executive Director in Center for Analytical Finance, Indian School of Business. FPN PhD Coordinator, Area Finance, Indian School of Business. He is also member of Steering Committee, Digital Identity Research Initiative, Indian School of Business. He was Unit Manager Sales in ICAI Prudential Life Insurance. He has interest in research in banking, financial inclusion, political economy of finance. He has many publications, academic publications, that is on bank cleanup, capitalization, lending, fintech for poor, cost of job rotation, identifying evergreen loans, familiarity breeds contagion, do social ties, trump collateral in determining loan performance, and so on. He has been a speaker to many conferences, American Finance Association Conference, National Bureau of Economic Conference, European Finance Association, Western Finance Association, UNC Duke Conference, and many more. In the media, he is having many publications, Good Economic and Good Politics, Times of India, Do You Suffer from Determinants, Live Mint, Indexing Tax Slaves, An Idea Whose Time Has Come, Live Mint, Retail Trade Loss, rupees 5584 crore a year due to bad calls, Live Mint. So many in Financial Express and Economic Times in Times of India. Sir has been regular contributor in all these areas. Also, Sir has cited many times on the media, The Economist, Bloomberg, pre-COVID slowdown shows new research, Times of India. Also, I must say that Sir is having around 60 plus media citations. Also, Sir is having 46 plus media publications. Sir is having around 12 working papers, including creditors' right and relationship banking, do derivatives matter, board conducting bank, do social ties, trump collateral in determining loan performance, familiarity, breach contagious, so many publications are having. Also, if we speak about policy impact, Sir has been appointed as member of technical group constituted by SEBI. The paper titled, Does Regulatory Forbearance on Bank Loan Adversely Impact Governance of Borrowing Fund? The Indian Experience, co-authored by Yakshuk Chopra and Naman Nashesh, was cited in the Indian Economic Survey 2020-21. Sir has participated in policy discussion hosted by Nitin Gadkari, Minister of Road Transport and Highways. Sir has interacted with Jayant Sinha, Member of Parliament and Chairman of the Parliamentary Committee on Finance, presented insights from the ongoing research projects and discussed about ISB's research potential. Sir has been invited by Confederation of Indian Industry for post-budget analysis in 2021. Sir has been recognized, has been honored by ISB Alumni Research Award 2020, EY IEMS Grant 2020-2019, NAC NYU Stern Initiative on Study of Indian Financial Market Grant 2019, 2018, 2017. Also International Growth Center Grant 2016. NAC IG IDR Grant 2016. NAC NYU India Initiative Grant Research 2013, 14 and 15. Sir is having technical interest, teaching interest in Indian finance system, and sir enjoy having reviews of financial studies, management sciences, real estate economics, and many more. We welcome you, sir, in this program, and it was really, really a great introduction to read, and I was so impressed to see all the working papers, all the media publications, all the citations that you have done. Once again, welcome in this program. Over to you, sir.
Thank you, Rajni ji. You're very kind. It was a long and kind introduction, so that puts a lot of pressure on me to do a decent job today. So what I'll do is let me start with sharing my screen. Can I share my screen?
Yes, sir, you can.
Sorry. Can you see the presentation? The slide with S&P 1200 global index? I can't hear.
Yes, sir, it's visible.
Okay, so I hope you're seeing the first slide, social stock exchange and ESG investing, right? Is that correct?
Sir, it's summary of applicants' information applied.
Oh, so there's something else. I'm sorry.
Yeah.
Let me correct this. Yeah, this is the correct one, I hope. Okay, so thanks a lot for having me here once again. It's a privilege to present my views to audience like this. I'm very much interested in the topic of ESG investing, especially the broad area of CSR. And I was as informed, I was also a member of SEBI's working group or technical group on social stock exchange. But let me clarify right at the outset. So these are my own views and do not reflect views of any group or any committee or even the school I'm associated with. So let me start, because we as academics tend to speak our minds, and which are not always straightforward, or a lot of things which people don't like. So let me be clear at the outset itself. So what I'm going to do is, and feel free, I think there are hardly any people here, so it's fine. So we can have a discussion. So you can stop me at any point of time, ask questions. You may not agree with what I say. Even then you can stop that. Let's have a discussion rather than a monologue. So I will pause after every statement I make, so that if you have issues, you can raise. Of course, clarificatory questions are welcome at any point of time. So I'm going to start with conceptual background about CSR and ESG investing. I'm going to spend a lot of time, because I'm sure you would have seen a lot of empirical stuff, but why companies have to engage in ESG kind of activities is not discussed all the time. So I'm going to spend time on that. What is the evidence? Then I'm going to look at careful empirical evidence on that. So I emphasize the word careful, because these days, in the name of data science, any two variables that move together are sort of treated causal. That's a very dangerous trend we are heading towards. We are in the name of data science. We are the empirical evidence that we use to decide on hypothesis is becoming weaker and weaker. So that's why I emphasize the word careful empirical evidence on this. Implications for ESG investing, and finally implications on SSE. This is what I'm going to talk about. So let's start with what's the conceptual background for firms to invest in social activities. So the classical view, as many of you might have read in your textbooks or outside, is summed up by Milton Friedman's famous New York Times article. I quote, he says, I quote, the responsibility to conduct the business in accordance with their desires, which will generally be responsibility is to conduct the business in accordance with their desires, which will generally be make as much money as possible while conforming to the basic rules of society, both these embodied in law and embodied in ethical custom. So what is describing what is the responsibility of business? He's very clear. Milton Friedman is very clear that responsibility of the business is to make money. The first part of the sentence is very clear, and as long as you conform to the law and social norms, your responsibility is to make money. This is the statement Milton Friedman made, and this was the sort of beginning. This is in the 60s, late 60s and 70s. This is sort of the beginning of sort of CSR ESG movement, and this is the classical view. So a lot of times this is misunderstood as saying that Milton Friedman did not care about social impact at all. His point is that manager does not decide. By manager, I mean the CEO or whoever is running the business should not be deciding on whether a firm wants to do CSR or ESG kind of work or not. Manager is an employee of shareholders, and whatever shareholders want, that's what the manager should do. That's his view. It is not that Milton Friedman was very much aware of the fact that businesses can cause externalities. By externalities, I mean pollution and other issues like child labor and so on and so forth. But his answer was these should be tackled by government and not firms, unless shareholders want it. So see, this is the misunderstanding a lot of people have. Milton Friedman does not say that companies should not engage in CSR. What his point is, they should do it only if the shareholders are willing, and not on the basis of managers' whims and fancies. That's his view broadly, and the reason is all these public goods are again, you are all well-educated people in economics, and you know that most public goods are non-rivalrous and non-excludable, right? So by non-rivalrous, I mean if I consume a particular good, it does not reduce the amount available for somebody else. And non-excludable means when you cannot restrict someone from consuming. Take for example a public park. So such goods are very difficult for private enterprises to deal with such things, and government is well equipped. So his view is government should deal with these kind of social issues. That's why they are there. That's why they collect taxes. And businesses should focus on making money or whatever the shareholders want them to do. This is a traditional view of ESG. But later, the dominant view these days is the stakeholder view. Here the view, this is propagated by people like Freeman, Wood, Cochrane, and others, is that these businesses are not just profit-making machines. These are responsible for all stakeholders, and not just by stakeholders, I mean employees, environment, customers, and so on and so forth. So business is not just, and even the future generation when it comes to issues like pollution. So business should worry about, the manager is not just a representative of shareholders. Manager should worry about all these stakeholders, and that is their job. And that's why society, the businesses have a responsibility towards society. That's a broader view that came in later after Milton Friedman. So the entire literature is a conflict between these two views. A classical view which says that you do what shareholders want. You are an agent of shareholder, and a more stakeholder view which says businesses have to worry about all stakeholders. So this is the conflict. Now, there is a very nice paper by Oliver Hart and Zingales of 2017. They sort of take the middle ground. What they say is, when it comes to charity and donations and so on and so forth, it's good if shareholders do it themselves. But there are areas, for example, they give this very good example of, let's say Walmart sells guns, let's say, and that those guns lead to let's say mass killing somewhere. Now, there could be shareholders who don't like mass killings, right? Now, and who don't want their companies to support anything that has anything to do with mass killings. Now, the Friedman's view would be that, let the company do whatever it wants, give the profits to shareholders, and then let the shareholders use that money to say lobby the senators or run some NGOs or run some campaigns against guns and so on. That's one way of doing it. But that's, as you see, it's very complicated and inefficient. Rather, they say that when shareholders themselves do not want such things, it may be better for the business not to sell these guns at all. So therefore, it is not very clear that businesses do not have social responsibility. That's what how Oliver Hart and Zingales say. They say that there are some aspects of ESG where businesses have to worry. So this is, and then there is a final view which says that doing ESG is eventually beneficial for the firm. So this is, you're doing well by doing good kind of argument. So this is a whole set of theoretical kind of arguments that are there for and against firms engaging in ESG. So I looked at the literature carefully, and this is the broad picture that emerges from the literature. Why should firms do ESG? The reason, I worry about this because a lot of times when I get to speak to regulators, when I get to speak to practitioners, this aspect is totally ignored. And this has implications for your disclosures, your audits, your regulatory intervention, and so on. The reason why firms should even get into CSR or ESG kind of activities and what motivates them has direct implications on investments and exchange. So let me classify. This is the broad set of reasons why firms get into ESG. It starts with the moral hazard view. This is your culmination of Friedman's argument that the simple reason for ESG is that manager wants to exploit the firm at the exploit the shareholder. So this moral hazard view is that the reason firms do ESG because CEOs this is the kind of hollow effect. If CEOs do a lot of CSR, then their personal value will go up. People will start liking them, and so on and so forth. For example, in India, we have this. You must have seen this. A lot of times, some CEOs donate from foundations, corporate foundations. So basically, these corporate foundations belong to shareholders, but popular press writes as if this is the money given from that CEO's pocket. All the credit goes to the CEO, and the expense is borne by shareholders. So this is clearly moral hazard. This is not what shareholders want, and there are many papers that claim that moral hazard is what drives CSR or ESG kind of activities. And I'll come to evidence in the next slide. Now let me just explain. The second view is that no, it's not moral hazard, it is strategic. Now, what do I mean by strategic? Strategic view says that, look, these activities help the firm. This is that doing well by doing good argument. Now, how do they help the firm? One, there could be a lot of the labor donation channel, which is what I have at the top. There are a lot of employees who may be willing to work for a lower wage in a firm that does good for the society. So that's the labor donation channel. So you will benefit from CSR activities because you'll get to hire good employees at a lower wage. That's possible. The second explanation is consumer channel. There may be a lot of consumers who are willing to pay more. You may be willing to pay more for, let's say, organic food, or you're willing to pay more for A2 milk, or so on and so forth. So that's your consumer channel. That's why firms behave responsibly, so that they can get hold of these consumers and benefit. The third is the signaling channel. Signaling channel is your CSR allows you to signal that you're sort of a high quality firm, and it works like an advertisement for you, and that's how it benefits. That's a third view. And the fourth is politics channel. Politics channel says that you do CSR to avoid intervention from government and activists. That's why it's called private politics and public politics. If you don't do CSR, there could be a situation where politicians will come behind you. Regulations will you voluntarily do things so that you avoid being later penalized by regulators or being subject to these boycotts. These days with social media, you have all kinds of boycotts. So that's the strategic view. So the whole idea is firms do CSR because in some way it benefits them. It's not charity. It benefits the firm, and that's why it could benefit in any of these ways. The third broad view is altruism. You have to do CSR or ESG because you're altruistic, goodness of heart, warm glove kind of feeling. It's you don't benefit at all materially, but you still do it because you like doing it. That is pure altruism. That's another view. And finally, there's something called induced innovation. I don't want to get into it. It'll take a lot of time. But so broadly, so ultimately, it's important to understand when you talk to a firm or advise a firm on CSR or ESG, you have to understand what is the motive behind it. Is it moral hazard? Is it and your disclosure, your audits will all depend on what is driving CSR. Is it moral hazard? Is this strategic, or is it altruism, or it is induced innovation? So let me provide some evidence. There have been very careful studies which have thrown all kinds of evidence. Unfortunately, evidence, I can't say that this is where we have reached. A lot of work needs to be done. The evidence is totally mixed. Empirical evidence is totally mixed on all fronts. So that's the part. So what people do usually is just select what they've, whatever likes their preferences and say, look, this study has shown that this is how it works. But unfortunately, you will also find 10 more studies equally careful which have shown exactly the opposite result. That's the state of affairs of this research. And we are nowhere close to reaching any conclusion as to why firms engage in CSR. For example, so this study of Cheng, Hong, and Xu, it's a very interesting study. What they do is that they exploit this experiment where, by the way, if you have any questions, any concerns or any other views, please stop me at any point of time. Since I have only some 35 minutes left, I'm going a bit fast. But any questions, any concerns, please feel free, please stop me, and I'll be happy to answer. Or I may not have answers also, but that's fine. I will learn in that case. Okay, so let me move on. So the evidence on this Cheng, Hong, and Xu paper is very interesting. What they do is they exploit this event. The reason I'm saying these are careful studies. One is they are peer-reviewed and published in topmost journals, either in economics or in finance or in accounting. And more importantly, they try to go as close as possible to causality and not just study some kind of linear relationship that you'll see in most of the so-called studies. Right. So let me explain this Cheng, Hong, and Xu for you. So what they do is they exploit this experiment where in the US in 2003, as you know, whenever Republicans come, they cut taxes. In 2003, the Bush administration reduced taxes significantly on dividends, and a lot of managers, CEOs, started increase their ownership in companies because it was cheaper for them to get dividends than getting perks because dividend taxation went down significantly. Do you see this is an exogenous increase in ownership of insider ownership or the manager ownership in firms? The reason I'm saying exogenous because it's exogenous to CSR. It has nothing to do with CSR. These are kind of exogenous shocks that will give you room to go close to causality. Otherwise, in social sciences, there is no way you can establish perfect causality. It's impossible, but you can at least go closer, right? Now, the hypothesis these researchers test is that firms that benefited from this dividend taxation, what happened to their ESG investing once the manager ownership goes up? So you will see if it is a moral hazard that was driving ESG before, then once managers themselves have stake in the firm, they should reduce CSR activities. Do you see that? Because now their own money is at stake because they are now owners and not just every rupee that goes into CSR reduces their income in the way of dividends. And that's what they find. Interestingly, they find that as the managers themselves, their own stake goes up, the CSR investments go down. And another interesting thing that they do is they use something known as regression discontinuity, where they look at firms where shareholder governance proposals get passed by slightly more than 50% versus those where these proposals get defeated by slightly margin, where the voting is slight, 49.5% versus 50.5%. What I mean is consider a firm where a shareholder governance proposal passes with the support of say 50.1% of the votes. Another firm where the shareholder governance proposal does not pass but it gets like say 49.7% of the votes. So these firms are otherwise similar in terms of governance. It's just a matter of that day's voting that they lost, and they find that firms where shareholder governance increases, ESG investment decrease, right? So this actually shows that this whole ESG business is moral hazard. It's manager moral hazard. It's not something shareholders want. That's what they find. Is that the only finding? If that is that final? No. There are equally careful studies that find other way. For example, Margolis, Eflebin and Walsh 2007. They look at some 800, 600, 700 studies on CSR, and they conclude that that's not true. There is some weak relationship between ESG and performance. So ESG is beneficial. If you go by Cheng, Hong and Cho, ESG is not beneficial. But this survey, which is even more careful, finds some evidence that ESG is associated with higher profits. Then altruism. People have looked at altruism. Does altruism work? This study by Davidson, Worrell, and L. Jelly. What they find is if altruism is what is driving CSR, so they look at announcement made by investors where they get out of a company because this company is not doing ESG activities, right? Some oil company and all that. So if it is the case that investors are altruistic and that's why the CSR or ESG works, then you should see that once this information comes out, their share prices should go down. But that's not true. You will find a lot of others coming in and buying these stocks. So altruism also, there is no strong evidence. Similarly, when it comes to do employees work for lower wages, again, no strong evidence. You can always, you will find, you can always produce some summary statistics, but once you control for their ability of the employees, quality of the employees, education, there is no evidence that employees are willing to work for a lower wage for a good cause than for a not so good cause. In fact, people have looked at lawyers working for public interest litigation. Once you account for the ability of those lawyers, their fees is the same. It's the reason why they're different is because of ability and nothing else. So that's another study. So there is some evidence, sort of consensus in the literature that consumers actually are willing to pay a bit more for CSR firms than non-CSR firms. There is some evidence for that. And I have a paper. This is a paper with Shiva Rajgopal and me. This is a paper on Indian CSR, the CSR mandate. What we find is CSR maybe has some signaling benefit. What we see is when firms were forced to spend on CSR, again, we do this regression discontinuity. As you know that the Indian CSR law, I think 2013, I think Section 135 of Companies Act, where firms which have a sales of above a threshold or capital of some threshold or profits of above some threshold are required to either spend on CSR or explain their failure to comply. So we use these thresholds and look at firms which are very comparable but which are on this either side of the border. And what we find is those firms which are forced to spend on CSR or engage in these ESG kind of activities, they actually, those who are doing a lot more before, they actually reduce spending on ESG and they substitute it with advertising. That's what helps us conclude that maybe CSR had some signaling benefits. So in conclusion, the evidence is very weak that CSR actually benefits firms materially. Maybe there is some benefit through signaling and consumers are willing to pay more, but there is no, and there are equal number of studies which show that this could be moral hazard and nothing else. There are studies which show that CSR helps during crisis. There are studies which show it improves productivity, but there are a lot of other studies that also show that this is sort of useless from a firm's point of view. So all in all, although theory lays down a lot of channels for CSR, the empirical evidence, unfortunately, is all over the place, literally all over the place. So it's very, very hard to conclude, what is driving CSR and empirically. Of course, you can always cook up some example somewhere that, look, this firm did so much CSR and it benefited them or whatever. Those examples are there, but I'm talking about on an average when you try to rule out other explanations. For example, Hartmark and Sussman, 2019, they are very interesting recent paper. What they find is they exploit this fact that this Morningstar database started giving, identifying firms with high ESG and low ESG. What they find is inflow into high ESG firms increased by $24 billion within a week, within 10 months, not week, right? So this shows there's a lot of investment money, the investor money that goes into CSR. But the problem is that when they ask investors, why do you invest in ESG? Most of the investors said that they think that this will also make high returns. But when they look at actually returns of these funds, again, after carefully controlling other things, they don't find anything. They don't find these funds outperforming others after accounting for other factors. In fact, they claim that this is what is known as effect heuristic. Those of you who are interested in behavioral finance know this. Effect heuristic is something where you're guided by your emotions and what you think that whatever should be is the one what actually happens, and you don't pay close attention to empirical evidence. So there is money flowing in, but the purpose behind that money, and they do a very careful. All these papers, by the way, are available in the public domain. Those interested should read them. They're very interesting papers, and you will see how careful they are. So Kruger, I can go on for the entire hour on this, but the whole point I'm trying to make is that the evidence is mixed. Maybe there is some strategic benefit of ESG, but you can't claim with a lot of confidence that that's what the case is. Now, so I conclude the first part of the conceptual framework with this. This is a kind of summary of it. So ultimately, what kind of CSR emerges, what kind of ESG emerges, depends on these two factors. And this has implications on disclosures, this has implications on regulations and so on, and that's where I'm headed right after this. So the question is whether your shareholders have social preference. On the horizontal axis, I'm representing shareholders, and on the vertical axis, I'm representing all other stakeholders. What I mean by stakeholders, I'm talking about employees, talking about work, the outside society at large, and consumers, and so on. Suppose shareholders have social preferences and the entire world outside also has social preferences, then it's very interesting. Then it's easy. You can do not-for-profit CSR. It need not be strategic. CSR goes through, and profits may or may not go up. It depends on how much. Suppose consumers are willing to pay more for your CSR products, for you being non-polluting product that you produce, then it may not significantly negatively impact profits. At the same time, shareholders are also happy. That's one. So one use of this talk, if it may, that in your discussions on CSR, if you can use this when you talk about ESG, if you can use this framework, it will surely help the discussion. The question is, what kind of preferences shareholders have and what kind of preferences stakeholders have. So if both are social, then it's going to be a non-for-profit CSR, and profits will not be impacted much. There will be mixed effect. But on the other hand, let's assume shareholders are classical. They are profit maximizers. They don't care for your CSR or ESG and so on. But stakeholders, society at large, cares for it, right? In this case, shareholders will engage in CSR only if benefits the firm, right? It has to benefit in some way. Either consumers should pay more, or workers should work for less salary, or it should help them avoid some political intervention, or it should have a signaling benefit. So there will be CSR, but this CSR will be a strategic CSR. It will be like any other business investment. And therefore, the disclosure and all that will change accordingly. And remember, if it's the first box, your disclosure will be more about social activities. Whereas if it's the second box, the shareholders, since they care only about firm benefits, you should focus on how it is beneficial to firm. The third, the lower on the left, the third box is when shareholders have social preferences, but stakeholders don't care. These are cases where shareholders want firms to do CSR or ESG, but the broader society doesn't care. Consumers are not willing to pay more for a good quality product or non-polluting product, or employees are not willing to work for less. And if that's the environment, then this CSR will negatively impact your profit. And only a charitable CSR can work in this case. You cannot think of CSR, if this is the world, you cannot say how CSR can benefit the firm. And finally, if everybody is classical, nobody cares for anything beyond profits. If profit maximization is what it drives everything, then there will be no ESG, and you just maximize profit. So ultimately, when you evaluate ESG of a firm, it's important to consider which of this box we fall into, and that's where we get into SSE and investing and so on and so forth. So I don't have time to discuss this framework because I've already taken 38 minutes. I have only 22 minutes left. So this is the end of conceptual framework behind ESG. So the whole idea is, I think if you are a consultant or if you're looking at a firm engaging in ESG, it's very important to understand why is this firm getting into ESG, whom does it benefit. Eventually the Nobel laureate Becker made a very important statement. If it is the case that people are not willing to pay more for CSR or ESG products, then you should be sure that at least the shareholders are willing to take this loss, right? So or you should know that this activity benefits the firm. One or the other way, unless we have conceptual clarity on why ESG may not work well. Once we have that clarity, once we know clearly that why we are doing ESG for this purpose and this is the constituency, I think rest of the things about disclosures and the exchange and investing will follow. So that's the first part of my talk on the conceptual basis for ESG, and I'll move on to the social stock exchange and investing, and I will pause for some questions if there are any. Okay, so there doesn't seem to be any question. So I'll move on. Now this idea of social stock exchange, and I want to emphasize once again that I'm not representing the views of the committee I was a part of, because I mostly disagreed with most of what the committee said. So that's why these are not views of the committee I was a part of. These are my personal views. Now, what is the social stock exchange? First, what is this whole idea of social stock exchange? Social stock exchange, as opposed to the mainstream stock exchanges that we have, the whole idea is that this is going to be an exchange where either NGOs, which are totally non-profit kind of firms or organizations, or firms which are commercial enterprises but also have social intent, these kind of firms will be listed. They will raise capital, and their stocks or whatever debt instrument or whatever instrument they use will be traded in these exchanges. So this is the idea of a SSE, and the finance minister spoke about this in her first budget in 2019, the July budget, and then she followed it up with SEBI has followed it up with a committee, and I think work is going on for starting a social stock exchange in India. Now, why should we have a social stock exchange? That's the first question that matters. And this is a textbook answer. All of us have done this kind of social studies kind of work, where moment a question is asked about why something should be done, we list the kind of advantages and disadvantages of that. And this is the supposed advantages of a social stock exchange. That's what a lot of people who support social stock exchange claim. They claim that it improves market access to these kind of social enterprises or NGOs. It brings in transparency and accountability, synergy between investor and investee, continued stream of finance, performance-based philanthropy. Because you're monitored, if you don't do well, you will not get money. Market discipline and healthy competition, reduced burden on government, and access to finance. So these are arguments that are made why you should have a separate social stock exchange, and what it can do to this whole area of philanthropy. Now, before saying anything on this, many of these arguments are very reasonable, and of course they are made with good intent. There is I don't dispute the intent at all. I agree that a lot of money needs to go into social sector, especially in a country like there's no doubt about it. But the question is, does this work? If you set up a social stock exchange the way it's been conceptualized, will it lead to more flow of capital to social purposes? And will it work? That's the question. And that's where I'm going to talk about my take. First, let's see international experience. Many countries in the world have tried social stock exchange. See, remember, social stock exchange and ESG investing are two different concepts. ESG investing is where, as an investor, you invest into firms that care for the society, that are ESG compliant, environment, society, governance, and so on. So ESG investing can happen through mainstream stock exchange as well, or without stock exchange as well. It's not necessary that you need a stock exchange to invest, right? You can have private placements and so on and so forth. So that's ESG investment. Social stock exchange is a sort of platform for socially oriented firms to list and trade. So ESG investment can happen in social stock exchange and can happen outside as well. So experience world over with social stock exchange, unfortunately, hasn't been great. It's been tried in Canada, Singapore, UK, and many more places. The story is that trading and activity in social stock exchange is hardly anything. It's a very, very small proportion of trading in their main main exchanges. It is not the case that a lot of small firms or NGOs have been able to raise tons of money using a social stock exchange. In fact, this may be I'm not going to spend a lot of time. You people are experts on this. There is this IRIS standard of disclosure, global, so IRIS standard, and many of these exchanges mandate this IRIS standard. And despite that, look at the kind of volumes, 100 million and 40 million and so on and so forth. These are very, very small given the size of these exchanges. So globally, the experience has been not so good with social stock exchange, although the objectives seem to be great. Now, the question is why? So this is where my take is. So I think that why do you need an exchange? What does exchange do? Why do you think you need exchange? The exchange, one thing that exchange can solve by mandating a lot of disclosures is this issue of information asymmetry. Let's say there are a lot of, and now I relate to the theory that we discussed. Let's say investors are altruistic, but they want to be sure that they are giving money to a firm which is actually doing social kind of work. So when you list in a stock exchange, because you're supposed to do a lot of due diligence and so on and so forth, it may be able to reduce that whole listing in a social exchange may reduce information asymmetry. And that's what my second point is. It may provide a kind of certification effect. There's a lot of discussion on why do people do MBA at all. Do they learn anything, or it's just the fact that they have cleared a very difficult exam that gives a certification effect, and that's why they do MBA. This is the same argument here, right? So the fact that you're listed in an exchange gives you a kind of certification effect, and if there are altruistic investors, they will be confident about you, and that money will flow in. And the third and more important reason why you need to have an exchange is it's going to give you liquidity. Let's say an investor is today you've given some money to a charity or some kind of objective. There is no way you can liquidate it. It's very difficult. You can stop funding them in future, but there is no way you can liquidate the same thing. And should there be a need, that liquidation facility is not there. But once you have an exchange, you will get it. Now the point is, all this can be done in main. You can do it in NSE, BSE itself, and themselves. And why do you need a social stock exchange for that? Now, the argument that people who support social stock exchange make is that those exchanges are big, those requirements are rigorous, and that is why small firms and so on and so forth. So small firms cannot get listed there, and that's why you need a separate exchange. Now, does this argument hold water? That's the question. Let's see one experiment that we tried in India of small and medium enterprises. If many of you may know that we have a dedicated platform for small and medium enterprises. It's known as Emerge. NSC calls it Emerge, and BSc calls something else. I don't recall the name. There is a small and medium enterprises dedicated exchange. Exactly same arguments were made. SMEs, they don't get capital in the large stock exchange. They need a separate stock exchange. Once you have that exchange, they'll get listed. New money will come. All this management will improve, and so on and so forth. If you read the objectives, and it's exactly like the social stock exchange. It was assumed that once you have this SME stock exchange, it'll all be milk and honey after that. But the fact of the matter is, despite such a boom, startups in India this year have raised $20 billion. $20 billion. $20 billion is what? 140,000 crores. This is the fresh money they have raised. I'm not even talking about exchange and all that. $20 billion, whereas SME exchange does the trading of 3,000 crores, 5,000 crores. The new money raised is like 3,300 crores in BSc and 3,000 crores. Even if you add both the exchanges, all of them together, they are not even $1 billion. This is the state of affairs of SME exchange. Very little trading happens. Most of the stocks are illiquid. They're there just for the sake of it, and it does not improve anything. Neither. In fact, we carefully looked at what happened to firms that got listed in SME exchange before and after, and we ran a statistical analysis with the simple OLS, least square kind of approach. We checked whether firms benefit after listing on any of the parameters, and you will find none of them is statistically significant. Neither their return on equity increases, nor their return on asset increases, nor there is a growth in net worth, nor there is a growth in profit, nor there is growth in revenue. So I can't reject the hypothesis that listing in SME stock exchange did nothing to these firms. Neither they got more capital, nor they got more bank loans, nor they benefited by more investing more, none of that. So the skepticism, I carry the same skepticism for social stock exchange. Just because you put up a stock exchange doesn't mean that all of them will flock to the exchange and start investing in these enterprises. The reason is, when I participated in discussions, so there was a big disconnect with with NGO type of people, and I totally respect where their heart is. They think that if you mandate more disclosures, if you mandate more audits, if you mandate more and more of such compliance measures, then it will go against the small firms, because they won't be able to do it. The social enterprises will not be able to comply with all these things, and therefore you should avoid more disclosures. The problem is they don't understand the very purpose of an audit or a disclosure or a rule or whatever is to give comfort to the investor. The problem, why are you saying there needs to be a stock exchange? Because you think that investors, there is information asymmetry, investors do not know about these firms, and if investors come and get a certification effect, and that's why the money will flow in. But at the same time, if you do not have audits, if you do not have disclosures, if you do not have control on related party transactions, if you do not disclose the social impact well, and if you just say once in a year I'll give a broad statement, then that information asymmetry problem is not going to get solved. Just because there is an exchange and you list in an exchange does not mean that money will start flowing in. This is a basic problem. I realized that those people who want an exchange, but they do not want the kind of audits and regulations that exchanges carry with them. But in the absence of these, you don't have investors coming in. If there is no information asymmetry, investors would have invested anyway. You don't need exchange at all. So that's a big dichotomy of the people who, on the one hand, advocate a social stock exchange, but at the same time, they do not want audits and compliance on SMEs or these social firms. Then obviously there's no money going to come. And I made the case of SME exchange. We did the same thing. No trade, no money coming into SME exchange. I think the way the current kind of social stock exchange that we are visualizing, we can talk after 3-5 years. I don't see that you will have a lot of money flowing in through the social stock. Of course, money can come to ESG, but that can come through the main stock exchange itself. So this whole idea that having a new stock exchange will lead to a lot of flow of money and improvement in social enterprises, I think is totally misplaced, because we have sort of missed why stock exchanges are required. So stock exchange should aim to reduce information asymmetry, should give certification effect, should provide liquidity. That is where more money will come. That is why you as the institute and chartered accountants have, I think, a very, very important role to play to convince these NGO type people that these audits and disclosures are necessary. If you don't have them, you are not going to get money. And I think the IRIS seems not so adequate for this. I think people can work out a good disclosure framework which does not burden the social enterprises beyond a point, but at the same time gives comfort to the investor. That is where I'm not ideologically opposed to SAC, but the way it is conceptualized, I see it going the same way as SME exchange. Now, the final point is, some of you may wonder, in that case, why is then ESG investment going up? You see big flows on ESG investment these days. For example, look at these funds in the US. The two graphs that I show you, the performance of S&P 500 and S&P ESG index, they're very close. ESG index has done really, really well. It's done as much as the index. So if it is, in theory, I said there is no evidence that ESG is beneficial, then how is that these funds are doing well? Then how is that these funds are doing as much as the index or better in some cases? And why is that so much money coming? So that's a question that I plan to answer and stop the presentation for today. So in India also, for example, you have this Nifty ESG index, right? So what happened? Look at the returns of this. 5 years of 17%, since inception 12.79% annualized. And if you see, compare this ESG index to any other index, equity large cap, equity mid cap, or any other index, which is there on the left hand side of my screen, this ESG has done better. Now, how do I reconcile my initial part of the paper where I said that there is no clear evidence that this is beneficial with this evidence, which apparently shows that ESG investing is super beneficial? The firms actually tend to do well. Now that's so the reconciliation is this. What is happening in the name of ESG investing these days in the US is that put most of your money into Apple, Google, Microsoft, and Netflix, and so on and so forth, right? That's all that is happening. If you look at this, that is called ESG investing. It is not investing in some new social enterprise that you and me have started and which is solving some poverty in Africa or some some water conservation or somewhere. That's not what is happening. That's happening in India. If you look at Jal Jeevan Mission, that is solving more problems than any kind of ESG investing put together, right? So that's now the risk. I am not opposed to it. You can invest. The problem with this is that in markets, what happens is there are cycles in markets where particular type of firms start doing well. For example, in the early 2000s, technology did extremely well. But then you had 10, 12 years where technology was dead and it was a time for finance. At that time, in the name of ESG, if you had invested in Goldman and Goldman Sachs or Citi and all that, you would have performed very, very well. And if you had invested in Microsofts and Cisco's of the world, you would have been doomed, right? Then now we are in a phase again where technology is doing really, really good. So the point is, it's very, very hard to disentangle whether the so-called ESG performance is actually because of ESG, or it's just, it's just going on with the trend. You're investing in technology companies and technology is doing really well. And what happens when technology stops doing well? Remember, market cycles, if you've studied for last 150 years, nothing goes on forever. There are cycles. People used to worship Warren Buffett, and now nobody talks about Warren Buffett. And they may start talking about Warren Buffett after some time, because now value investing seems to be dead right now. If you do value investing today, you're not making money, you're nowhere, right? So the whole idea that this attributing this performance to ESG is a little bit dangerous. And I'll give an Indian example. I looked at two funds carefully, the so-called ESG funds, SBI Magnum Equity and Axis ESG. Both funds have done really, really well. But look at the investments: Infosys, HDFC, ICICI, TCS, Tata Motors, L&T, Ultratech, Wipro. Anybody will invest in the same companies. I don't see any company which is like Page Industries. I don't see any out of the world kind of ESG kind of thing which is caring for society. And you want more evidence, compare this. Look at this. These are non-ESG funds from the same fund houses. Look at SBI Blue Chip. Look at SBI Magnum and SBI Blue Chip. Same companies. HDFC, ICICI, Infosys, HCL, L&T, one or two companies here and there. So where is ESG here, right? Look at this SBI Magnum Equity ESG top holdings. Look at the SBI Blue Chip Equity top holdings. One is ESG, one is non-ESG. It's the same companies, right? The only difference is the ESG firms have invested more in these TCSs, Infosys, HDFC banks of the world. And as long as these firms are doing well, these guys will keep outperforming. There will be a time when these firms will not do well. That's what market history is. So the evidence, and this is a very telling summary evidence. It's not a very careful evidence. What I did is I looked at those firms which these ESG funds have invested, but other blue chip firms have not invested, right? Look at their return is 8.6%. So the first two, 46 and 45% return, are those firms where ESG fund has invested and a non-ESG blue chips also invest. There the return is huge, 45%. But when it comes to those Indian stocks which are in ESG but not in this blue chip category, there it's just 8%. So similarly with Axis also, if I pick that, I find 14% versus 45%. The point I'm trying to make is this fad that ESG funds perform better than others. One needs to be very careful. It could just reflect the fact that they've invested more in large, well-known companies which claim to be socially responsible. I don't know how socially responsible it is. For example, banks which evergreen lot of loans and led to a big economic crisis in India. I don't know. You call them socially responsible. I have no idea whether they're just because they don't emit gas. Whether they are socially responsible or not, I have no idea about it. But then, yes, all private banks are considered. Yes Bank was considered socially responsible investment. Kind of negative spillover effect it has created, maybe much worse than a gas or a coal company. I don't know which is bad. It's very difficult to decide which is more socially responsible, which is less responsible. So I think people have to be careful about inferring about ESG. That's why I said, if you make that conceptual framework, what is this, define what this social responsibility is. Are we getting into this because it is beneficial to the firm? Then what should be the disclosure norms? What should be the trading norms? Are we getting this because investors are altruistic, they don't care for returns? Then what should be the disclosure norms? What should be the regulations, and where should these be traded? All these things need to a lot more care needs to be done. But what I see, unfortunately, is people have hardwired ideological positions, unfortunately, that prevents any kind of somebody like me who says this can go this way, that way, they'll say get lost, because you have to be a hardwired this side or that side kind of person. So that's where I would like to leave. I'm not giving you any conclusion because I myself don't have an on this. So I think you should the three sort of red herrings that I would want to leave with is, we have to really worry whether the so-called ESG is proxying for some kind of risk where funds are concentrating on particular type of companies which are doing well right now, may not do well later. Is just showing performance? And just starting exchange alone is not going to help. Look at SME exchange. Tell me how this SSC is going to be different from SME exchange. That's not going to work. I think more work is required on disclosures, on ESG, and more comprehensive kind of social impact than just looking at gas emission and this and that. So that's it. So I'll be happy to take questions on this, and otherwise I'm done. Thank you so much. I think you're on mute. Yeah.
Thank you so much, sir. It was really a wonderful and more knowledgeable session. So moving on to our second session, we have our speaker, Manoj Chakravarti, sir, with us. Very good afternoon, sir. Let me introduce Manoj, sir. Manoj, sir, after passing out from Scindia School, Gwalior, sir read economics at Stephen College, Delhi, and finished his post-graduation from St. Stephen College, Delhi, attending Delhi School of Economics under distinguished professors like Amartya Sen, Jagdish Bhagwati, K.N. Raj, and John Robinson. Sir started his career with India Foils Limited, a panel packaging company, then a part of IT Reynolds British Alumni Group. Sir then migrated to Middle East to join one of the largest trading organizations there, the Pawan Group, where again he worked for 13 years in Muscat, Dubai, and Saudi Arabia. On his return to India, Sir joined Titan Industries, a part of well-known Tata Group, in August 1996 as General Manager, Retailing, heading the retailing department, setting up the world-class World of Titan and Time Zone showrooms, and then moved into heading corporate affairs and Europe operations in May 2003. For over a decade, Manoj sir was the Chief Operation Officer at the Center of Corporate Governance and Citizenship, India Institute of Management, Bangalore, leading in India's leading B school. He was then responsible for overall running of this Center of Excellence as per its vision of being preferred place for any referral on the wide canvas of responsible business. Sir recently moved on in May 2020 after superannuating from IIMB to devote time to his own advisory, the Center for Ethics and Responsible Business, a boutique advisory specializing in the area of business ethics, areas of business ethics, responsible business, relevant reporting and governance, all of which go towards establishing a sustainable enterprise. He has also been the Chief Strategy Officer and Advisor with Green Evangelist, a think tank obsessed with sustainability, CSR, and inclusive growth. Sir is also a privileged member of the board of Fourth Wave Foundation, an organization enabling the disabled. Sir is on the advisory board of Ethics India, a legacy company based in Mumbai, specializing in training, certification, research, and advocacy on business ethics. Sir is on advisory board of Wood Street Investment Services, a wealth management, financial planning, and portfolio management company, and on the advisory board of SR Asia. Sir is on the board of Saath Livelihood Services, a Section 25 company engaged in improving the quality of life of the underprivileged. Sir is on the advisory board of Action Aid Association. Sir was recently invited to join the advisory board of a startup online merchandising store, Galaxy. Sir has widely traveled across the world, and his hobbies include playing the piano, bonding with pets. He is founder CEO of Sustain Incorporation, and advisory on strategic sustainability, governance, ethics, and responsible business. He is a jury member of ICAI and Business and the Community UK. Sir is passionate about business excellence, drawing inspiration from the Malcolm Baldrige model of approach, deployment, and outcomes on the platform of continuous employment. Thank you so much, sir, for accepting our invitation and coming in this session. We are privileged to have you for the session. Thank you so much, sir. Over to you. Sir, you are not audible. Not now. No, sir, you're not audible. Please unmute your mic, sir. No, sir. You are not audible. Please unmute, sir. Please unmute. Your mic is muted, I think. I request technical support to please help it out. Sonali ma'am, can you hear me? Shakun
Yes,
ma'am,
ma'am.
please help
Yes,
out
ma'am.
Manoj sir. Please help out Manoj
Yes,
sir.
ma'am. We are calling.
Sir will be audible now. I can hear voices from his side.
No luck. Can you hear now?
Yes, sir, perfectly. Now it's everything
Better?
perfect. Yes, sir, perfect.
1 minute.
Sure, sir.
Just give me a minute.
Sure, sir.
Can you see any slide?
Not now, sir.
But you can hear me, right?
Yes, sir. So you need to share screen.
Yes, I'm sharing screen. I have shared screen. Even now you can't hear?
So we can hear you, but we can't see you on
Okay,
screen.
but it's more important that you hear.
Yeah, exactly, sir.
Swap presentation and side view. Okay. Can you hear me now? Can you see the slide now?
So slide we cannot see, but we can hear you.
Okay, so I think it's more important to sort of hear me. So I will proceed.
Sure, sir.
Because in any case, I'm not very fond of presentations PowerPoint. Okay.
Yeah,
Because
sir,
by now, all
it will be a pleasure.
your participants would have received many presentations and many information about social responsibility and ESG. So it is just as well that you can't see my presentation. But if you can't hear me, then please do let me know. All right? Fine. So I've heard speakers yesterday as well as today, and correct me if I'm wrong, that it's a complicated exercise. It requires a lot of work, lot of protocols, lot of templates. My humble proposition to you all is that and I am not an academician in that sense. I'm a practitioner. I've worked in corporate life for a long time. So I think if all you professional people are going to join companies, your main purpose is to create value. Your main purpose is to create profit in a responsible manner. Now, if you do that, everything else falls into place. Rajni, am I heard? Can you hear
Yes,
me?
sir. Yes, sir. You are
Okay.
audible.
And I would consider the father of governance and responsible business is somebody whom I've met and you may have heard of, is a judge from South Africa called Mervyn King. Now I had the opportunity of inviting Dr. King to our center at Indian Institute of Management, and he said company reports and company reporting have become very complicated. The best report is what is done in 2 pages. What we did right and what we did wrong. That in a way is nothing but integrating your operations with every aspect of the company's day-to-day work. Now, why is it so important in India is that the purpose of business, please understand this carefully, the purpose of business is mankind and society is its biggest customer. If you do not integrate business with mankind and society, your business is not going to last very long. I have worked in the Tata Group for a long time. You know how old the Tata Group is. You see any organization, you take Wipro, you take Infosys, you take any of the large organizations, you will find that people who have considered the balance between society, environment and profit to succeed and stay on for a long, long time. In India, it becomes more important because we have the largest democracy in the world. We are 3rd largest economy in terms of purchasing power. We have a young enterprise population between 20 to 40 years. 500 million people will be around that age. This is very, very significant. We speak 30 languages. Our foreign exchanges are 350 billion. GDP is growing. Even with the current situation, it grows at 5%. Stock market is volatile but energetic. So in spite of the current volatility, India will emerge more sooner than later at the speed of light. But the reality is, ladies and gentlemen, 70% of India is still rural. We are 4th in the list of dollar billionaires, but we are not very high in the Human Development Index. We are 132 out of 185, which is lower than Bolivia, Guatemala, Gabon. Corruption index is still high. 8 Indian states are poorer than African states. Life expectancy is lower than Bolivia, Kazakhstan and Mongolia. Between 1996 and 1997 and 1999 and 2001, India added more newly hungry millions than the rest of the world taken together. So while there were 512 accredited journalists covering the Lakme Fashion Week, there were only 6 covering the farmer suicides in Vidarbha. So we are a very complex and extremely divergent country. You have rice selling at 50 rupees, but SIM card is free. You have a pizza reaching faster than an ambulance. You have a car loan at 5%, but education loan is 12%. Footwear is sold in AC showrooms, but vegetables are sold on the footpath. You have luxury and high-end cars, but poor roads and infrastructure. Food grains rot in storage, while people die of hunger. 2 IPL teams are auctioned at over 3,000 crores, but tons of people cannot get 2 square meals a day. Students with 45% get into elite institutions through quota and donations. Why am I telling you this? Is how are you going to operate and in a profitable business in a scenario like this until and unless you look at society and you look at the environment. Half of India's homes have cell phones, but no toilets. In spite of Swachh Bharat, which is a great step in that direction, we still have a long way to go. India is still home to a third of the world's poor. 300 million people need critical support. Business strategy, therefore, demands a paradigm shift in the acceptance of responsible competitiveness. Now, in this background, you have to behave in an ethically responsible and contribute to the economic development of your country while improving the quality of life of your employees, the community, and the society at large. This is nothing but a coming together, which is nothing but integration of profit, your care for society, your environment, and governing it under a canopy of efficient administration. Our earlier Prime Minister, Dr. Manmohan Singh, who was a very well-known economist, who said CSR is not philanthropy, it is not charity, it is an investment into our collective future. Because corporates are an integral part of a sustained economy, businesses cannot function against patronized by society, and all that I've been telling you so far is nothing but a restatement of the Millennium Development Goals, which translated into the Sustainable Development Goals, the 17 goals which yesterday's speaker spoke at length about, and the United Nations mandates by way of a global compact and GRI. So sustainability is an often used word, which basically means ability to do business without compromising the ability of future generations to do theirs. Now, to give you an example, the whole concept of optimization has changed. When I was in college, we read from the standard textbooks, Paul Samuelson, and optimization at that time was considered to be extracting the maximum, kitna bhi nichoro, and get the maximum from resources which at the back of one's mind were actually considered to be infinite. There is no problem. You can keep on plowing the field for as long as you want. The more harder you work, the more you'll create your harvest. Then one example I want to give you, that in our home in a small town, well, not very small really, Kanpur, we had a grape wine. We used to grow grapes at home, and we used to get lots of grapes every year. After 2 years, we suddenly found there was no grape, and we were worried. The plant was still there. On the outside, it looked fine, quite fine, but there was no output. When we consulted an agriculturist, he said you have to put back by way of manure, by way of compost, by changing the soil, by using fertilizer. And we did that, and after a year again, the grapes were flowering and there was a bumper crop of grapes. So that was my first lesson, that resources are not finite. You can maximize to the extent of extracting whatever the field or the environment can give you, but until and unless you put something back, it will just become a problem for you and you'll stop making profit. A similar example is like a car battery. In the old days, in the old Fiat car, when you started the car, there was a red light which immediately got off the moment the car started working. So the moment you drove the car, the battery got charged and the red light went off. So you are giving back charge to the battery, and you were then able to create energy to carry on. Okay. So this is nothing but a restatement of the Sustainable Development Goals, and to create corporate immortality, as I call it. Corporate immortality is nothing but ensuring that there is a balance between your profitability, your profit-making strategy, your environment, and how you are managing the community, and making sure that all the three are in balance. And this whole art of managing this in balance is the art of governance. So integrating governance with CSR, integrating governance with the environment is an act which many scholars have said that these are the non-financial links to your strategy. Ultimately, they become financial, because if you are unable to function, if Sterlite was unable to function in the chromium plant because of pollution of water, then obviously profitability also gets affected. So ultimately, it does have a lot to do with profitability, and therefore, whether it is inclusive development, you can call it, whether you could call it investing in ESG, you cannot have an island of excellence in a sea of troubled waters. Only to ensure that your resources continue, and for a long time, you have to have an inclusive development, because you can't have an island of excellence in a sea of troubled waters. Okay, and then there is a competitive advantage. Customers prefer good companies. Today, the most preferred company in terms of trust would be Amul Dairy, would be the Tata Group, and automatically your psyche of purchase, your consumer behavior, your customer psychology goes towards those companies which have a good reputation of being good to society, caring for the environment. And the earlier speaker mentioned that there is no evidence to prove that investment has grown in ESG performing companies, well-performing companies. I would like to differ to some extent that this building of trust, this building of reputation takes a long time. You cannot just invest in, you cannot have a ESG program today and expect that by tomorrow you will, or by next year, your customers will start trusting in you and then buying more. It does take a long time. We have experienced this in the Tata Group. Nobody, remembers, or nobody even thinks of the fact that it could be one of India's largest employer, or India's largest company, or India's largest market cap. When you ask a man on the street, what does the name Tata mean to you? He will automatically say, trust and reliability. Okay, and therefore this builds the brand and facilitates brand differentiation. All these attributes are nothing but going to add to your profit over a period of time. It generates a proactive license to operate. It facilitates recruitment of good people. People feel proud when you join a company which has a good record of social responsibility and environment management. And of course, the profit is the outcome. So I would take it that this entire concept of environment and social responsibility is nothing but a strategy of the company towards more profitability over a longer period of time. Okay, so you need to create that imagery of a healthy, sharing and caring company, and therefore I now can switch to the purpose of business, which has to go beyond creating shareholder value. It has to create stakeholder value. The main purpose of social responsibility, and by social responsibility, I also include the environment, is to provide goods and services that are profitable, that are ethical, and respect the environment and the community in which it operates. Okay? So, in other words, it is actually raising the stakeholders' importance to the level of a shareholder. Once you accept the fact that a stakeholder is as important than a shareholder, then automatically everything falls in place. So, ladies and gentlemen, I want to reconfirm that the exercise of environment and social responsibility and governing it should be seen through the lens of a important but a simple exercise. For example, I am against in moving this entire thing into a different department. Of course, you need the department to make it more efficient, but the buck stops with the president of the company. The buck stops with the managing director of the company. And once the leadership ensures that it is the collective responsibility of the leadership team to take care that the people, planet, and profit are moving together, then there is absolutely nothing to worry. It is a simple exercise. Imagine a stool with only one peg which says financial. Okay, it will not be stable. But the moment you put financial, environment, community, and you will automatically, the whole business will become much more stable. So the agenda of sustainability and responsible business should be the central to your business strategy. It is a critical driver of business. How quickly your businesses respond to this will determine whether you will succeed and whether you will fail. And you've seen the gentleman in the last speaker mentioned about the good record of a bank on social responsibility. You know that Enron had a wonderful record of CSR, but it failed in transparency. It failed in declaring to the public at large and its stakeholders as to what was going on. Plus, there was an ethical issue involved. Look at Satyam. Satyam ran a wonderful program of volunteerism. It ran a wonderful program of emergency. Anybody from the south will know that the emergency ambulance service of Satyam was a fantastic service. But please understand that one good cannot offset a bad. That balancing should not take place. The core value that an organization must carry before it does any of these various reports and ESG and CSR and section 35 and schedule 7 is that the core of the business must rest on ethical grounds. Once the leadership declares that and articulates that in very clear and uncertain terms, I have no doubt that you will automatically look at the integration of sustainability and responsible business as a part of your core business strategy. There is, however, a question that although there is a business case towards sustainability, which is basically balancing the interest of environment and the community and making the stakeholders as important as your shareholders, you have to declare this to the public by way of your annual report. But there can be, and there is an argument towards this extra expenditure. Even Adam Smith, the great economist that he was, he said years ago, the societal welfare is not the company's business. The company's business is the government is only to make profit, and it is the state's duty to take the responsibility of public welfare. Now that may or may not have been, correct at that point of time, but as there is more value being created, society looks at how that value has been created. whether it has been created in a proper manner. The other danger that I want you to bear in mind is that this entire exercise of environmental and social responsibility and governance should never be taken as a PR and a brand building exercise. Your brand building exercise, building that brand can be consequential, can be a result of that. It can happen because this was going on for so long. But to just project it as a PR exercise is extremely short run, and I would strongly advocate against it. So the proof of the pudding lies in its eating, and if you are unable to communicate this in a proper manner to the public at large, then you run the risk of it being branded as a PR exercise and it falls flat to the ground. Okay, so I have basically come to this first part of my discussion, which is why is there an importance for ESG and responsibility. It basically, even in the old days, when there was no such knowledge of or no such research being done on CSR and ESG, it was a simple word used that profit should be your main objective, provided it is made in a responsible manner. Now, the provided it is made in a responsible manner, ladies and gentlemen, is nothing but a coming together of how does your organization view its actions with regard to society, how does it view with regard to environment, and how are you reporting it? Because transparency is the only way that you can communicate to your potential investors. This is what we are doing, and there are various matrices that are used. I'm coming to that in a moment, and therefore we've come a long way since Milton Friedman, who looked at only shareholder profit, and therefore the other aspects of sustainability and governing the environmental and integrating it were actually not very well focused on. But the global financial crisis was a kind of an eye-opener that if we are not responsible business, then we will fail more sooner than later. And the whole concept of stakeholders. Now, who is a stakeholder? Anybody can be a stakeholder. Anybody who is impacted by the operations and actions of your company can be a stakeholder. If you have an organization which doesn't have a parking lot and you're parking on the road which is obstructing traffic, then your stakeholder, which is a normal guy who is driving the car, will be going to be affected, and he will put a PIL suit against you that this is not on. Okay, you've seen this happening across India. I'm primarily staying to the Indian context because all of us are working and going to operate in primarily Indian companies. But of course, the rules of the game are the same. And look at the problems that Hindustan Lever had with regard to its mercury plant in South India. I mean, there was some problem, and the mercury, polluted the environment around it. And till today, they have to explain that how this is the step that we've taken. Look at how Coca-Cola suffered and Pepsi, because I would say that maybe they didn't read the writing on the wall, but to be accused of using pesticides or harmful ingredients in the water, it was not addressed. Many years ago, Cadbury's had a problem which had worms in its chocolates. Now, these are things which are not only restricted to the field of quality control. It is how you have managed to keep your society happy, how you have managed to keep the environment in check, and therefore a complete commitment from leadership to incorporate social, environment, economic, and ethical considerations should form an organization's core strategy. Okay. Now, I'm going to move away from presentation now, and I'm going to use, yes, I hope you can see me. Can you see me now? Am I seen? Can you see me? Okay, good. So now I have no more presentation to give, because I've told you what the core issues in terms of the reasoning are. Now, what is ESG? You've heard this many times, and I mentioned to you that I am not in favor of using that they are non-financial factors which are considered. Ultimately, they become financial factors, but for the definition, it's an idea that companies should use all factors to influence and challenge their environmental impacts, social impacts, governance, and attributes. Okay, but investors today are changing. They are not looking at only profitability. They are looking at a landscape which is a mixture of shareholder earnings, responsibility to employees' well-being, accountability to greater good. In short, businesses have to do good, and they have to be good to be considered good, so that people will buy their products and people will invest in their company. And there has never been a clearer idea in the minds of people than this challenging and unprecedented era of COVID-19, which has impacted businesses and people from small manufacturers to giant construction companies all over the world. Environmental, social, and governance investing was important, but now it has become even more important, because people are worried that how long can we continue? And it is a dream of every organization to achieve corporate immortality. People may come and people may go, but the company goes on forever. Tata Group, 150 years. And there are many companies like this. You know, in my time when we were looking for jobs, we went to the mecca of Indian business, which was in West Bengal, in Calcutta. Bombay was just a branch offices, and Delhi was bureaucratic. The entire bureaucracy was there. But today, very few of those Calcutta companies, the blue chip companies in those days, have remained. The answer is very clear to all of you, ladies and gentlemen. It's only because they never bothered about long-term investment in the community. They never bothered about considering the environment. And of course, governance in these areas was absent. Their entire focus was primarily on making money and repatriating it to their principals, their headquarters abroad. So all those companies do not exist. What greater evidence do you need to understand the criticality of looking at a balance between the community and the environment, and governing it in a manner and treating it as a core strategy of the company, not as an also, till 5 years ago, all the CSR practitioners were considered eligible for VRS. I'm telling you from experience, because I worked in these companies. CSR mein dal diya. Matlab ki he is on the way out. Suddenly, those backroom boys from CSR have moved to the boardroom. Suddenly, CSR has become one of the most important factors. And you take any of these, successful organizations, you'll find that whichever organization has focused on a balance between stakeholders, creating a balance and managing the stakeholders, and creating the balance between stakeholders and shareholders, and making the environment and the social responsibility as a core part of their strategy, those companies have done very well. And of course, we were talking about examples, but there is enough evidence also to show that ESG fund valuations and predictions have actually, they're an estimated $12 trillion in assets managed with sustainability goals in the US. So it is changing. It is certainly changing, and it ensures, just imagine your own body for that matter. You go with the intention of having the right food. You go with the intention of supplementing it with vitamins after a particular age. You try to lead an active life. For what? You have that belief and the feeling. It may or may not happen. That is up to many factors. But you go with the assumption that if I invest and I put back into the body, I will perhaps live for a longer time and live a happier life. Exactly the same analogy holds true for a company. Because after all, ladies and gentlemen, a company is a living organization. It is built up of people like you and me. We cannot just keep on repeating the fact that making money is most important, of course. But the point that I'm trying to make, and I've made for the last 15 years, is that you can only make money if you're healthy. You can only make money if your environment is in equilibrium with the society. Where I'm talking to you from, and that's perhaps why the connectivity is not all that hard, is in the Nilgiri Mountains. It is Kunur. You know that there is no plastic allowed here at all. You cannot enter this city of Kunur, which is near Uti, with anything that is plastic. Okay, we have a very active collector who has made this a rule, and there are people who check this. But there is a problem here. Without finding an alternative, you cannot just ban plastic. How will milk come? You can't, because bottle is its own problem. And we are living in a dynamic society. We all believe as of today that electric cars are probably the cars of the future. But there is already an inquiry out saying that electric cars, what happens to the battery after its life is over? Where do you dump them? So what I want to emphasize is that we are living in a very dynamic situation. We didn't know a lot of things even 5 years ago. We never bothered about it. Why are we bothering about it now? Because it is affecting our life. Similarly, the life of a company gets affected. You've seen what happened in POSCO's case. You see what happens in Kalinganagar in the case of our own Tatas. You see what happened in Singur. You see what's happened in the chromium plant of Vedanta, Sterlite. Now, after having seen these examples, do we still believe that we can carry on without laying emphasis on environment, on social responsibility, and focus only on profit? It is not possible. So it is a no-brainer. I think the debate is over. Now the debate is shifted to something even more complicated. What format to use? As I said, the guy who started it all, Professor Dr. Mervyn King, said, please do not make copious sustainability reports. And I've done 5 of them. I know 5 sustainability reports, which I think, with due respect, are done only the shelves of the managing directors. Nobody has the time to read those copious reports, and there is on record to show that the Nike report was the best. But best how? Because it is the longest, it is the biggest report, But yet they were found wanting in the case of slave labor. Look at all those wonderful reports that you hear about. Where did they get the textiles manufactured in Bangladesh? And what happened in Rana Plaza? There was a fire and people died. So if you want to survive, okay, let me qualify that, not you, but if your company wants to survive over a long, long period, you would have to integrate the environment, social responsibility. You would have to, and tomorrow there may be a new thing. I don't know. We never knew about CSR that seriously 5 years ago, 8 years ago. So today, Global Compact, which also aimed at the same thing, is now no longer that important. And I've attended quite a few programs at GRI in Geneva. And my earnest request to them was, for heaven's sake, make it simple. I'm a practicing manager. I don't have time to do research and only write reports throughout the 365 days. They talked to me about materiality. I said, nobody understands what materiality is. Would you please explain to me? He said, no, that is relevant and it is material to your profit. I said, say that. So the jargon that we use, the way we present a report, takes me back to what Mervyn King said. What we did right, what we did wrong. 2 pages is what his ideal report is, but I think he was simplifying. You don't have 2 pages. 2 pages is not possible. So, yes. Then we come to your management of ESG, your integration of ESG helps you to manage business risk. Would I invest in Enron? I would get scared. No, Baba. Would I invest in Satyam? Maybe now I might. But the day that stock crashed, you should see those, it's like a thriller. How, Ramlinga Raju, he was riding a tiger, but he couldn't get off it because he created something which is impossible to manage. But they bounced back. They bounced back thanks to the timely intervention. And there are lots of cases. You have, I was reading just the other day that, ILFS has gone into some problem. So, all these things are linked and you make mistakes. You are, as I said, a company is a living organization. Yes, in my view, although I'm a Tata guy, I felt that Nano was a bit of a mistake in retrospect. Okay, it had the good ideas, but the haste in which we went into Singur and the haste in which we got out of Singur made the product virtually non-existent today. But you learn from your mistakes. Tata Motors today is a far more healthier company than what it was at the time when Singur was created. And look at the small thing. On the day we were kicked out of West Bengal, on the same day, Mr. Ratan Tata inaugurated the state-of-the-art cancer hospital in Calcutta. Because the two are not linked, but they're linked in the minds of the people. Can you imagine that the day you throw me out of a house, I'm actually investing back into your house? Do you know when Tata Steel profits were the lowest, their investment in CSR was the highest? Now, there has to be some logic to this because these are not ordinary people who would just do this for the sake of PR, these stories are told to us day in and day out. An accountant as professional as you people went and advised Mr. Tata. I said, Mr. Tata, your balance sheet, we could tweak it a little, and we could save a lot of tax by constructively apportioning these costs elsewhere. And you know what his answer was? He said, Avinash, will it be the right thing to do? Just ask us, will it be the right thing to do? Now, that culture comes from the belief that I'm not only in it for making money. There's a larger picture in mind. And I'll prove it to you, and he did, that we can still make money on it. Do any of you know that on the fateful day of 26/11, not one employee left the Taj Mahal Hotel on the day of the terrorist attack? Now, why am I saying this? Because this is a corporate behavior. Corporate behavior doesn't come out of a moral science class or somebody telling you that this is right and this is wrong. This is built over a period of time. It is not that we don't make mistakes. Of course we make mistakes. As I said, we are human. So I get back to it that it is a question of looking at it in totality as a part of your overall business plan. Do not only treat it as a part of an exercise. It's like, look at a CSR presentation being made today in any company. You will be a part of it if you're not already a part of it. There's a boardroom meeting. There is a CSR. There's an act which says that there has to be a CSR director. There has to be a CSR people. So exactly like a marketing head makes a marketing plan about the launch of a new product, you make your CSR plan. How important it has become. Why has it become important? Because it's a question of survival. You don't toe the line, and in India, since everybody doesn't act in that manner at the same time, there is a law. Probably the only country in the world which has a law. Now, there could be a debate on that also. That's a different debate, whether the law was good, the law was bad. You can keep on arguing till the cows come home. But there is a discipline. And if I may make a suggestion, the best document you read is the National Guidelines for Responsible Business, available on the internet. I didn't see it referred to in the meeting. It is even more important than Schedule 7 and Section 35. Just as a booklet, downloadable from the net. It used to be called voluntary guidelines. So we discussed it with the ministry and said, bhai, voluntary nikal do, because voluntary means nobody will take it seriously. So it became the national guidelines. Okay. And they are, and we corporate people are very creative. Somebody thought that he could claim offset and refund and drawback and expenditure if he sent his vice president to Harvard for an advanced management program under skill development. The skill development is part of your Schedule 7 and all that. So the matter was referred to at that time Sachin Pilot. And he gave a very nice answer. He said, will your board allow it? Will your board allow you to claim CSR funding for sending your deputy managing director to Harvard for AMP program? Obviously, the answer is very clear. Don't make these stupid, via media, how to evade. No, there is no need. Because you're doing it for yourself. So compliance is, of course, important. But the whole theme.
Sir, you are not audible. So,
Huh?
yes, sir, now it is audible.
Not audible?
Yeah, it's audible now.
Okay, I'm glad. So, I'm a member of the reporting, International Reporting, Integrated Reporting Council. And there, it's very clear that they are working towards a new format. Concise format, which explains to you how to make a report. Now, it's basically how you manage your organization, and they've got 6 capitals, which is basically all that you use for your operations. How you use those capitals, and how you make sure that they are managed in a manner which which report, and then you prepare a report which gives the outside transparency of how you manage the operations. Basically, imagine, and God forbid none of us have to, imagine going for a CT scan. The integrated report which we are moving towards, and that is, to me, at this stage, will be the ultimate in reporting. It will go beyond CSR report, it will go beyond sustainability report. It will be simple, okay? So that report will make sure that a CT scan of your company is available for the outside world to see, not only your doubt or debate the fact that ESG integration is good or bad or should be done. My request is that it could look to be very formidable because everybody has his own template and everybody has. That's why I said that I'm not really in favor of presentation. And we at IIM Bangalore, I have stopped using them because it is much better, because you can get these presentations anyway. I mean, they're recording it and you can hear it later. But the point that I'm trying to make is that, do you believe in it? If there is belief, then there is no doubt that you can make it work. And you can make it work in a very, very simplistic manner. And there is absolutely emphasize different emission rules and climate control rules and all that. Those are available, and it is you treat it as a business strategy. Once you get into the mindset, and I don't mean only you, meaning only the people who are accountants. This is your entire leadership team. Your entire leadership team should believe in this. And once you believe in this and you communicate it, do you know if you walk on the shop floor of Tata Steel and you ask the shop floor guy, and they've got thousands and thousands of workmen, what is the objective of your company? What is the mission of your company? Without batting an eye, he said, be the lowest cost producer of steel in the world. Now, that communication, right down to the lower level, is what, to my mind, is really going to bring around this integration. So don't keep it in your cubicles. Don't keep it in departments. You need those cubicles and departments to improve and enhance the efficiency. But basically, you have to make sure that there is a complete buy-in of the organization, led by the managing director of the company and his team. And I'm sure that if this is the kind of background that accountants are going in with and joining and becoming professionals, they will be far better than most companies in the world. Thank you very much. I've said my piece. I'm terribly sorry that the being in the hills, maybe the video was not visible all the time. But as I've also mentioned to Sonali, any of you are welcome to correspond with me offline on the internet or whatever. And any questions, any details, any extra appendixes that you want on a particular aspect, feel free, as people have been doing so. Thank you very much and all the very best. Yes, Rajni, it's all to you.
Thank you so much, sir, for the wonderful deliberation. Thank you, sir. So moving ahead for the session, CA Pramod Jain sir have joined us. So I would like to introduce our speaker of this session, CA Pramod Jain sir. He is FCA, FCS, HCMA, LLB, DISA, and MIMA. Sir is insolvency professional and Central Council member. Right now, sir is chairman of committee on international committee, founder chairman of CSR committee, and sir is member of CSR and many other important committees of ICAI. So without wasting much time, I'll hand over floor to Pramod Jain, sir. We welcome you, sir, in this session. Over to you, sir. Thank you so much.
Thank you. Thank you very much, Rajni Mittalji from the Kota. Chairman of the CSR committee in absentia, Satish ji, Vice Chairman Aniket Talati ji, the whole Secretariat, CA Sonali Das Haldar ji, the Secretary, the supporting staff, Shakun Goyal out here, whom I can see out here, and all my friends. Sabko mera namaste. So we are talking straightforward about. We have had this at the outset. My congratulations for having this virtual national conference on the CSR. Yes, CSR is undergoing change. Since January 2021, again, various changes are there, which are related to the Companies Act, whether to spend or whether to transfer and all those things. These questions are coming. So that all is related to my company law, accounting, bookkeeping, and all those requirements. One of the initial things which I'd like to share out here is that earlier it was spend or explain. Now, if you don't spend it, you'll have to give it to the government. So please take care that when you are finalizing the companies, the financial statements, doing the audit of the companies, where the CSR obligations is required. So kindly make a provision accordingly. Because the relevant amendments have been made applicable to the Act and the rules both. So now the publications which are already there by the CSR committee had taken into account those proposed changes, and what would happen post those changes are already given in those publications. So one can just download that from the website of the CSR committee, as well as the CSR committee's page on the ICAI.org. So that was related to, I would say, the changes, though that must have been taken care of by lots of speakers in this 3 days virtual national conference on CSR. I'll be talking about another very, very important aspect, though it might be answered in a single line, but at least we need to understand about it, that why, how, and what to do, basically. Because per se, when we talk about the taxation of CSR, and we'll discuss more, mostly about the income tax aspects. So, basic question which comes that yes, CSR expenditure, it is not allowed under income tax. So let us try and discuss about that, whether that is allowable or not. So I'll be sharing my screen to share a small presentation. I don't know whether I can get if anyone is having a query. I don't know. So if anyone is having, kindly Sonali ji, Shagun ji, kindly help that with me to raise if any question is there. So when we are talking about the taxation, there could be indirect tax, which would be including my GST, as well as the excise customs when they are imported, or certain items which could be levied with the excise. GST, of course, the questions have been discussed a few times, and not only through various currently applicable circulars or the GST law, but we had certain times had a discussion with the MCA whether this GST should be allowed. Because when we talked with the MCA, we discussed with the MCA, again, what the suggestion went was that whether the GST would be allowed on the CSR expenditure or not. One has to take care because the MCA cannot have the final wording on it. It will be with the Ministry of Finance, with the GST Council, because that expenditure on the CSR is not for the purpose of business. So when it is not for the purpose of business, whether that input credit of GST would be allowed or not. So that is the mute question on the indirect tax. So currently the situation is because I don't handle the indirect tax, but what has been explained to me, because it is not used for the purpose of business, so that input tax credit is not allowable. But again, kindly think it again on two angles. First, now suppose you have to spend a crore of rupees, and suppose the GST amount is 10 lakh rupees. So you say, okay, I want to take the GST input credit. So if you take the GST input credit, so out of 1 crore, 90 lakh you'll spend on CSR, 10 lakh you'll be taking credit. So again, 10 lakhs you'll be spending more. So if it is allowed, so currently in my view, it is not allowed. So currently inclusive of GST, you'll have to make that total expenditure. But let us talk a bit about my direct taxes. If anyone has a different view, all those who are watching, they can just raise a question. And again, as I said, Sonali ji and Shogun ji, they can help me with the questions at the end, right? So we are talking about the direct tax. And per se, if I talk about income tax and where the expenditure on the CSR is not allowed. So where is it mentioned? Of course, it is mentioned under section 37. And this explanation 2 to section 37, subsection 1, which was inserted with effect from assessment year 15-16. So practically, if I talk about this CSR expenditure, the CSR section 135 was made applicable with effect from 1st of April 2014. So the first financial year was 14-15, and that's the relevant assessment year is 15-16. So from the beginning itself, the CSR expenditure was disallowed. Precedents, so many judgments were there where CSR was not mandatory. And it was at certain times held that it is in the nature of promotion of the business, so that would be allowed. So that discussion now will not be applicable because per se, what has been added through this explanation in section 37, subsection 1, the explanation 2, what it has been said? It has been said, for removal of doubts, it is hereby declared that for the purposes of subsection 1, so subsection 1 of section 37, so we will be talking about this subsection 1 of section 37. It is declared, it is hereby declared that any expenditure incurred by the assessee on activities relating to CSR, referred in section 135 of the Companies Act 2013, shall not be deemed to be an expenditure incurred by the assessee. Shall not be deemed to be an expenditure incurred by the assessee for the purposes of business or profession. Section 37 is a residual section where any expenditure which is other than section 30 to 36 is covered and allowed if it is in relation to the business or profession. So the explanation says that the CSR expenditure shall not be deemed to be an expenditure for the purpose of business or profession. So when it is not deemed to be an expenditure for the purpose of business or profession, then that expenditure will not be allowed as a deduction under section 37. Now, it talks about an expenditure. Can we say that any capital expenditure would be covered out here? Capital expenditure per se is not covered in the section 37. We'll be seeing in the next slides. So whether it is capital or revenue, both, it has to be what is referred in section 135 of the Companies Act. Now, there could be a case where section 135 per se is not applicable to a company and they are incurring such expenditures. So again, that would be tested, but not on this explanation 2, but the earlier judgments, where if we are able to prove that it is for the furtherance of business or profession, then the same would be allowed. But if we are claiming it to be an CSR expenditure, the same would not be allowed as a deduction. How do we disclose in our profit loss? We don't disclose it as an appropriation to the profit loss, though there is a difference. If I see the ITR, the income tax return, ITR 6, the ITR 6 talks about the CSR expenditure as an appropriation. But Schedule 3, it doesn't talk about the CSR expenditure as an appropriation. So that is disclosed as a separate line item in my other expenditure. So here, the controversy between the Companies Act and the income tax remains. So it has been time and again thought about whether it is an appropriation or is an expenditure. But now, yes, as per my Schedule 3, it is an expenditure. Income tax treats it differently. So that correlation, the companies have been doing it, making an appropriate disclosure accordingly. Now, what does section 37 say? Section 37, subsection 1. Because for the purposes of this subsection 2, this explanation 2 has been added, that for the purposes of section 1, because subsection 1 allows the expenditure as a deduction. So when does it allow? Section 37 subsection 1 says any expenditure not being an expenditure in the nature described under section 30 to 36 and not being in the nature of capital expenditure or personal expenses laid out or expended wholly and exclusively for the purpose of business or profession shall be allowed in computing the income chargeable under the head profit and gains from business and profession. So 37.1, what the expenditure would be allowed? That not the specific expenditures given under section 30 to 36, which is not a capital expenditure, which is not a personal expenditure, and which is expended wholly and exclusively for the purpose of business or profession, that would be allowed as a deduction. So these conditions, if are met, then section 37 subsection 1, the expenditure is allowed as a deduction under the Income Tax Act. Now, but the explanation 2 says that the expenditure which is on the CSR shall not be treated to be for the purpose of business or profession. Hence, section 37 subsection 1 is not applicable out thereout. So that deduction is not allowed under section 37 subsection 1. Now, the interesting thing out here is that what happens if that CSR expenditure is of the nature described under section 30 to 36. So if it is in the nature of section 30 to 36, then it shall be allowed as an expenditure. It will be allowed as an expenditure as well as it would be a CSR expenditure. So can there be any expenditure which is not there in section 37 but is covered under section 30 to 36? Let us see in the next slides what could have been a better suggestion, which is I would say that section 40 of the Income Tax Act. If the Income Tax Department or the Ministry of Corporate Affairs, they had the same intention that the CSR expenditure should not be allowed as a deduction, then instead of making it section 37, they could have said in section 40, which is an section where the certain expenditures are not allowed, and there they could have said that any expenditure incurred under section 130 in the nature of section 135 of the Companies Act 2013 would not be allowed as a deduction. So if they had mentioned section 40, then the case would have been different, and we were not required to see the section 30 to 36, because in 37 it is not allowed. But if it falls under any of the expenditures under section 30 to 36, then that being a CSR expenditure would still be allowed. I have to see again those sections 30 to 36, because certain questions comes. Okay, this expenditure I am in the nature of rent. So I am paying the rent. That is a CSR expenditure. Rent is specifically allowed in section 30, so that should be allowed as a deduction. So let us see those section 30 to 36, certain sections out there. So you have to see that every expenditure, that under which section it is covered under the Income Tax Act, to see whether that would be allowed as an expenditure or not. So let us see section, again, as I said, whether 30 to 36 allowed. So let us see those sections. Let us see for section 30 and 31. Section 30 first. What is allowed under section 30? Any rent, rates, taxes, repairs and insurance for the buildings. So these are all in relation to the buildings. Repairs, rents, taxes, rates, insurance, everything related to buildings. So when it would be allowed under section 30, it will be allowed in respect of rent, rate, taxes, repair and insurance of premises, which is used for the purpose of business and profession. Now here, that CSR expenditure is not incurred for the purpose of business or profession. And such rent, rate, taxes Those specifically not under, because it is covered under specific 30. So I'll have to see section 30. So section 30, the expenditure is allowed only and only if that is incurred for the purpose of business or profession. And CSR expenditure is not incurred for the purpose of business or profession. Hence, such rent, repairs, insurance for the building would not be allowed as a deduction if it is a CSR expenditure. Right? Now let us see section 31. 31 talks about the expenditure in relation to my plant and furniture, machinery, plant and furniture, and repairs and insurance thereof. Suppose I've got a machinery where I am preparing this PPE kits or certain such equipments or certain items which I am not in my business, which is not in my business, but I am distributing that in the for the COVID or other items. So whether the repair, insurance of this machinery plant would be allowed as a deduction, though we are claiming it as a CSR expenditure. What does it say? In respect of repairs and insurance of the machinery, plant or furniture, it shall be used for the purpose of business or profession again. So these sections 30 and 31, they in itself contains that they are to be used for the purpose of business or profession. So if that machinery is being used, its repairs will not be allowed as a deduction under section 31. Because that machinery which is being used for CSR purposes is not used for the purpose of business or profession. Right? So section 30, building we have seen, plant, machinery, furniture we have seen that in relation to these expenditures, if they are not for the purpose of business profession, that is not allowed. Then let us talk about section 32, depreciation. Machinery is there. So why the depreciation? It is not an expenditure. It is an allowance. Depreciation is not an expenditure, it is an allowance. So would that be allowed? So let us see. In respect of depreciation of building, machinery, plant or furniture, being tangible assets owned wholly or partly with assessee, used for the purpose of business or profession. Again, section 30 talks about business, that it has to be used for the purpose of business profession. 31 talks about this, 32 talks about that. So all of these sections are talking about the specific use for the purpose of business or profession. 35 will be talking about, 33, 34, they are not widely used, so I'm not talking about that. Section 36 again, which is for the other deductions, the specified ESI, PF, so many deductions are given there. So it says insurance premium for stocks, interest, all these. These all have to be for the purpose of business or profession. So the specific deductions which are given under section 36, the insurance premium for stocks, interest, ESI, PF, all those things, they have to be again used for the purpose of business or profession. So we have seen that most of these sections, I would say till now, whatever sections we have discussed, that is not allowing the CSR expenditure, because CSR expenditure is not incurred for the purpose of business or profession, and expenditure under these sections are allowed only if that is incurred for the purpose of business or profession. So this is the basic reason that why CSR expenditure is not allowed as a deduction under income tax. Section 36, we talk about employees also. If we talk about employees, other reductions, it talks about which is related to employees. Any expenditure bona fide incurred by a company for the purpose of promoting family planning amongst its employees. Now, this expenditure which is for the promotion of family planning, it is not for the purpose of business or profession. It is not for the purpose of business or profession. Now, if this is related to healthcare and it is covered under Schedule 7, so this expenditure can be claimed both as a CSR expenditure as well as deduction under income tax under Section 36. Please understand this. because this expenditure is covered specifically under section 36. So it is not covered under section 37 where that explanation has been given. So it is not that all expenditures. So CSR expenditures can be claimed as a deduction under income tax. I am not talking about ATG. ATG will be talking about later. First, we are talking about the expenditure per se deduction. So if it is covered under section 30 to 36, and that section per se itself says that it is not for the purpose of business or profession, then on that expenditure, both the CSR expenditure can be claimed as well as the deduction under income taxes. This is what I said earlier. Had the Ministry of Finance put that under section 40, then there would have been an absolute clarity. But here it is not an absolute clarity. I have to go and see that expenditure where it is covered. Where it is covered. And if it is allowed, not being in the nature of, in the process, in the process of my business or profession, then if that income tax, if my income tax act provisions allows it as an expenditure, then still it would be allowed, right? So you have to see the nature of expenditure, see whether in which section it is falling under income tax act, see under schedule 7 where it is falling, and then you have to take a call accordingly. Then another, so what is for the employees? Because it is for the employees, right? My salary expenditures or any activities for the purpose of benefit of the employees. Earlier, Rule 4.6, it talked about that any expenditure benefiting only the employees will not be allowed as a CSR expenditure. Now, what they have said in this revised CSR rules, they, while defining the CSR expenditure in Rule 2D4, they have said that activities benefiting employees of the company as defined under section 2 subsection K of section 2 clause K of Code of Wages 2019 will not be a CSR, will not be a corporate social responsibility. So any activity benefiting the employees. So who are these employees? For that, I have to see the Code of Wages 2019. And there I've just displayed what is that definition of employees out there. Here it says employees means any person other than an apprentice engaged under the Apprentice Act 1961. So an apprentice is not an employee. So it is clear from this Code of Wages 2019. Employed on wages by an establishment to do any skilled, semi-skilled or unskilled manual, operational, supervisory, managerial, administrative, technical or clerical work for hire or reward, whether terms of employment be expressed or implied, and also includes a person declared to be an employee by the appropriate government but does not include any member of the armed forces of the union. So armed forces of the union are not the employees. So again, they have referred in the CSR rules the definition of employee as per the Codes of Wages 2019. So I have to go there for any activity of the CSR which is benefiting these employees would not be a CSR expenditure. Salary is of course allowed because salaries per se is allowed for under section 37 if it is for the business. In the FAQ, what they said, that the salary pays to the regular CSR staff, volunteers of a company, in proportion to company's time spent specifically on the CSR can be factored into CSR project cost as part of CSR expenditure. You know, to my knowledge, to my information, there are various circulars issued by the Ministry of Corporate Affairs on the CSR since 2014. So there are certain different views emerging from one circular as compared to another. And after these changes in the CS section 135, read with the rules and schedule 7 also certain changes are there. These FAQs may need a revision. So to our information, they have a thought process of issuing a master circular for all the FAQs on the CSR. It is under process to our information. It may be there, may not be there, but the date till which that master circular is not issued, the existing circulars, whatever has been issued by MCA, are binding on MCA. The issuer is bound by the delegated legislation. So in that case, for March 21, if you are factoring that salaries, suppose an employee of a company is there, he's doing part job as an administrator and part for the CSR activities, the CSR committee of the company, then the proportion basis, if it is factored, so certain expenditure, suppose that employee is paid as remuneration of 10 lakhs. And they say, okay, 40% of his time is for the CSR activities only. So the two division, one is for business, that is 66 lakhs, and for CSR, it is 4 lakhs. So in the profit loss, they will have to bifurcate. In the hands of the employees, whole 10 lakhs would be taxable, of course, but the company would claim this 6 lakh as salary expenditure and this 4 lakh as CSR expenditure, which is currently allowed. Right? So that would be forming part of my CSR expenditure. But again, I have to be very careful, because currently, if there is no impact assessment applicable out there, for impact assessment, separate percentage of my total expenditure is allowed. Otherwise, for my CSR, the total expenditure, my administrative expenses could be subject to the maximum 5% of my total amount to be spent. So 5% to that limit, this salary can be factored. Now, if this 4 lakh is more than the 5%, then the excess amount will not be allowed as a CSR expenditure. Then this amount would neither be allowed as a CSR expenditure, nor it would be allowed as my business expenditure. So one has to be very careful. So here the rules of my professional friends comes to see, okay, what is allowed, what not, and how it is to be factored in, right? Then there are certain sections where it could be that the expenditure incurred or the voluntary contributions made, I would say the donations made, which are covered in the section, the series of 35, that would be allowed under Income Tax Act, as well as that could be allowed as a CSR expenditure. For example, section 35CCC. If the amount is paid to the agriculture extension project notified by the board, the purpose for which is for the expenditure for the agriculture extension. So if that is paid, so that would be allowed as a business expenditure, as well as it would be allowed as a CSR expenditure, right? If it isn't the Schedule 7, then national laboratory, university, or an IIT or a specified person, if certain amount is for the scientific research approved program, that amount is contributed. Here again, allowed as a CSR expenditure, allowed as a business expenditure, both. So I have to take a very conscious call. Again, 35(1)(3), 35(1)(2), it is for the approved research association, university, college, or institution, the contribution, the donation I make, that is for undertaking research in the social science or statistical research. So I contribute that. So that is allowed to me as a deduction under section 35(1)(3), again under that PGBP, as well as it is a CSR expenditure. And again, an approved research association or university under 35(1)(2) for undertaking any scientific research. So these expenditures are both allowed as a CSR expenditure, as well as they are allowed under the income tax. My common expenditures for 30, 31, 32, 36, 37, they are not allowed. But certain specific sections which allow me such donations, 35 months, contributions, these are allowed as my expenditures, not as a specific Chapter 6A deductions under Section 80G. 80G will be talking again later, right? 35CCA, again, for implementing programs of the rural development as approved by the prescribed authority by an association institution, which has its objects of undertaking any program of rural development or training of personnel or any sum paid by the prescribed funds as notified by the central government. So again, if here the expenditure is made, allowed both under CSR as well as the PGBP. Similarly, 35CCD, read with Rule 6AAF to 6AAH, any expenditure incurred not being used for the acquisition of land or building on any skill development of an eligible company on the skill development project notified for the board. So under this section also, because skill development again would be covered under Schedule 7. So both CSR as well as my business expenditure. So here the roles of again professionals would come that where they can take the benefit thereof. Now coming to donations. Donations, we know that donation per se is not allowed. If a company gives a mere donation, that is not allowed as a CSR expenditure. That is not allowed as a CSR expenditure. Donation per se. FAQ also says one-off events such as marathons, awards, charitable contribution, advertisement, sponsorship of TV programs, etc., are not CSR expenditures. So mere donation is, you may get an 80G deduction, but that is not a CSR expenditure. So you have to be very careful. What is a CSR expenditure? For that, we need to understand the CSR law. That it has to relate to a project, right? It has to be for a project or an activity. So the company should have the CSR policy, what activities it wants to enter into. And that CSR activity can be done either by the company itself. In that case, the donations will not be there. Or it could be through its own entity, created Section 8 company trust or a society, company's own created. But again, that entity which it has created should be having a project. Mere giving a donation to those entities will not take it to be a CSR expenditure. So I have to be very careful while giving that donation and treating it as a CSR expenditure. So what is the project? How the CSR committee is taking care that that project is being undertaken on behalf of the company. So what is the monitoring process thereof of that project? So that's why last year this your CSR committee came out with a utilization report. The CSR utilization report to be taken from the third party, which is implementing the CSR expenditure on behalf of the company. So when a company engages a third party to comply with the CSR obligations of the company on behalf of the company, then as per their agreement, one has to be with. So this way, the certificate course of CSR by our the CSR committee is doing a fantastic job, because we had a word with various other professionals who have done this certificate course from various other bodies, and they have found that the practical aspects which are given by this CSR committee of ICAI while undergoing this certificate course is really very, very helpful in pursuing their careers in the CSR, right? So practical things like agreements, CSR policies, all are very, very important to be understood in that way. So it has to be for that project. Whether deduction under Section 80G would be allowed, because One may read section 80G, and for one of the subsections they will say if it is for the CSR expenditure, 80G is not allowed. You know, whenever we are all chartered accountants, we are all professionals, we should always read the whole section where it is written. Don't go for the hearsay. We all are professionals. Just read the section. I'll be just pointing out certain specific things which are given under section 80G itself. Right? There are certain specific funds under Schedule 7. Again, as I said, first of all, mere donation is not CSR. But Schedule 7 contains certain activities which Schedule 7 per se itself says that giving contribution to such funds, there need not be any project. For example, Schedule 7 Clause 8 says contribution to the PM National Relief Fund or any other fund set up by the central government for the socio-economic development and relief. So if the PM National Relief Fund contribution is there, the company need not have any project. The company need not have any project. So mere a single transaction of donation, though stated in the circular, is not a CSR activity. But Schedule 7 says, if you're making a contribution to the PM National Relief Fund, that is a CSR activity. So Schedule 7, being a part of the Act, will override the circular. But my Schedule 7 itself says, you contribute to the PM National Relief Fund, your CSR obligation is done. PM National Relief Fund would take care where it is to be spent. So one-off donation, which if it is given under Schedule 7, allowed under Schedule 7, donation per se, that would be allowed to be treated as a CSR expenditure. First of all, we should understand that for the CSR activity, it should be covered under Schedule 7. If it is not covered under Schedule 7, merely giving a donation will not be a CSR activity. So, where in Schedule 7 it is given contribution to the PM National Relief Fund, this Clause 8 is given. Then Clause 8 also talks about, in Schedule 7, PM Cares Fund. Through a clarification while the Office Memorandum 28th March 2020, this amendments were made to Schedule 7, that PM Cares Fund, again contribution to the PM Care Fund, is a CSR activity. Again, first, as I said, I have to see to Schedule 7, then I'm going to income tax. So my Schedule 7 says contribution allowed, contribution to PM Care Fund, PM National Relief Fund allowed. And these both are allowed under section 80G23A, 100% deduction under 80G. Now what happens? A company has made a contribution to PM Cares Fund. So in its profit loss, in the other expenditure, it would say CSR expenditure, say 1 crore rupees. In the computation of income, it would disallow that CSR expenditure because it is covered under section 37. Because it is not covered under specific 30 to 36. So 37 I have to see. So 37, it is not for the purpose of business and it is CSR disallowed. Expenditure disallowed, yes. Expenditure disallowed, yes. Deduction at 80G available, yes. It is available. Take that 100% deduction under 80G2. It clearly mentions that contribution to this is allowed as 100% deduction. So take that now. Allowed. Further, contribution to Swachh Bharat Kosh. Schedule 7, Clause 1, Para 1, whatever you say. It says contribution to Swachh Bharat Kosh. And 80G23HK says Swachh Bharat Kosh set up by CG other than the sum spent under section 135(5). Now what does it mean? 80G I can get a deduction if I am contributing to the Swachh Bharat Kosh But if I'm contributing and treating it as a CSR expenditure, that is not allowed as a deduction under Section 80G. So in the PM Care Fund and the PM National Relief Fund, you make an expenditure, you adjust that in your computation and add back, but in 80G you claim the reduction. If the company is under CSR obligation, it makes a contribution to the Swachh Bharat Fund, Swachh Bharat Kosh. It adds back to the computation, but 80G deduction is not allowed. But if it is not a CSR expenditure, and any person for that matter, a company or a proprietorship partnership LLP, they makes a contribution to Swachh Bharat Kosh, they would be allowed deduction under Section 80G. So I don't know, this change was made for the Swachh Bharat Kosh as well as the Clean Ganga Fund. So why they restricted the 80G deduction on these two contributions, which are Schedule 7, but allowed to PM cares? So there is no clarity of thought process in my view. In my view, what is the reason that we don't want the companies to contribute to the Swachh Bharat Kosh as a CSR and want money from others? I'm not able to comment upon that. And similarly, if I talk about 4, Schedule 7.4, contribution to the Clean Ganga Fund. It is a CSR expenditure, yes, but under 80GA3HL, not allowed as deduction under Section 80G. If it is a CSR expenditure. So PM Cares Fund, PM National Relief Fund, you contribute, it is a CSR expenditure, yes. Deduction 80G, yes. Clean Ganga Fund and Swachh Bharat Kosh, CSR expenditure, yes. 80G, no. So this, I would say, step brotherly treatment has been given to both the Clean Ganga Fund and the Swachh Bharat Kosh. Right? It is very clear reading the Schedule 7 as well as the 80G section of the Income Tax Act. Now, Schedule 7 again talks about 9, that is contribution to incubators funded by the central government, state government, or any agency or PSU, public funded universities, IITs, national laboratories or autonomous bodies established under the auspices of ICAR, ICMR, CSIR, DAE, DRDO, DPT, DST, Ministry of Electronics and IT, engaged in conducting research in science, technology, engineering, and medicine aimed at promoting SDGs. We've seen in Section 35 that national laboratories, IITs, public funded universities, for the scientific research. So contribution to that is Schedule 7, allowed. It is allowed under Schedule 7. So Section 35, again, that expenditures are allowed. And if these are having Section 12A registration, or I would say not 12A, 12A or 1023C, or it could be anything, or 35 to whatever it may be, they are having 80G registration. So contributing to these would also be allowed as a deduction from the gross total income. Gross total income, right? So donation to others, 80G5 read with 80G2A4. Contribution is there. If it is as per Schedule 7.9, that is this one, 9. If it is as per Schedule 7.9, then that is allowed as a deduction under Section 80G. For others, it has to be only for the project. So my charitable trust societies, Section 8 companies, which are not under these 9.1, which we have discussed in the next slide, last slide, they, if are registered under Section 80G and all doing the activities in the nature of CSR, would be allowed to treat those expenditure when it is for a project. For a project. So apart from this 7-9, where it is a contribution, mere contribution, for other than the specified ones, if it is for 9, that is IITs, incubators, and public funded universities, so that is allowed if they are registered under Section 80G. For others, it has to be a project. So my normal trust societies, which various of our friends are having, or business entities are having, they are building schools, hospitals. So they are not covered under these 9. So if a company is contributing to them, it has to be for a project, say a room or a fans or whatever they say. Okay, fans would be from my side, whatever. So a project has to be there. So then it would be both CSR expenditure, not allowed as the expenditure under income tax, but 80G deduction would be allowed. But 80G deduction would be allowed. So total 12 activities are there in Schedule 7, out of which only 4 are contributions. Only 4 are contributions. Out of this 4, against 2, you can get 80G benefit, that is PM Care Fund and PM National Relief Fund. For the Swachh Bharat and the Clean Ganga, you cannot get 80G. And apart from this 9, so others I have to be very, very careful. So Schedule 7 also says mere contribution. So for that contribution, I have to be very careful where it is allowed, where not. So hence, unless it is a bit interesting, the role of professionals will not be there if it is so simple. So it has to be interesting so professionals can apply their mind and guide that where 80G would be there, where expenditure would be there, whether it would be CSR expenditure or not. And the auditors will have to take care while finalizing issuing their true and fair view of the financial statements, whether the expenditure incurred and displayed as a CSR expenditure is really as per Schedule 7 or not, mere donations or not. Mere donations, in those cases we have discussed, these 4 parts plus this, that is a CSR expenditure. For all other, there has to be a project. There has to be a project, right? Rest has to be activities and projects. So FAQ by MCA also in 2016, they have mentioned there is no specific tax exemption which has been extended to the CSR expenditure per se. Finance Act 2014 has also clarified that expenditure on CSR does not form part of the business expenditure. Special activities in this circular they have mentioned. So if anyone has any doubt, the FAQ says several activities like PM Relief Fund, scientific research, rural development projects, skill development projects, etc., which find place in Schedule 7, already enjoy exemption under different sections of the Income Tax Act. So per se, it is not that expenditure cannot be claimed or a deduction cannot be claimed or exemption cannot be claimed under income tax. You have to be very, very careful where the company is doing an expenditure or making a contribution, in what nature and under which section that deduction is allowed. If it is not allowed, then it is not allowed. But if it is allowed, so which sections? I have just talked about certain sections of 35, one section of 36, 80G, deductions are there, expenditures are allowed. So I have to be very, very careful about it. So the tax benefit options under the CSR, nil if the company takes directly undertakes the CSR expenditures, unless those are covered under those section 35 ones. Right? If the company undertakes CSR expenditures through 80G registered NGOs, including its own foundations, so depends, PM National Relief Fund, Care Funds, 100%, 50%. If the company undertakes certain expenditures through institutional projects, 35 CCA, 1, 3, in that case, 100%. But if the company undertakes CSR expenditures through institution projects registered under 35(2)AA, 35CCC, 35CCD, it could be 100 to 150%, though this 150% is coming down to 100% per se. But again, certain capital expenditure and weighted deductions are there. So the only thing which one has to be very careful is that if we go for the tax efficiency, then the real intent of CSR takes a backseat, because the choosing of the options for the Schedule 7 is reduced because I go for either these sections. So I have to be very, very careful in guiding my clients out there that how to go about a CSR expenditure. Right? One of my last slides about the CSR and MAT. Though if you are going for 115 BAA or 115 BAB, the companies, if they are going, they won't be getting 80G deductions, please. Please take care, because MAT is not applicable. Also Chapter 6A whole is not applicable. So even if these companies are opting for 115 BAA, please take care that any amount which is given as a donation for 80G, for 12A 80G registered, they won't be getting the benefit of 115 BAA. So companies who are into CSR, if they want to avail of 80G, please think again, because they would not be allowed deduction under Section 80G if they are opting for BAA or BAB. Kindly guide your clients accordingly. Right? That expenditure got, then virtually no benefit they will get under section under the Income Tax Act, except if it is for the 35 ones, right? So 35 ones, one has to be very, very careful. So CSR and MAT, of course, CSR is charged against income as against an expense in the statement of profit loss, hence it results in the lesser book profit subject to MAT. And of course, because it is not an appropriation, this is an expense in the profit loss, so my quantum of CSR expenditure also to spend. Suppose I've got a profit of say 100 crores before CSR expenditure. So I reduce my CSR expenditure of say 5 crores. 2% is 2 crores, so let me reduce 2 crores. So 98 crores. So again, when I have to spend in the next year, I have to see the last 3 years profit. So on 98, I have to again calculate 2%. So virtually, I'm getting the benefit of this 2 crores which I have spent in the earlier years for the CSR. So for the book profit, it is not about MAT. Even for the calculation of my CSR, I'm getting the 2% benefit of already CSR expenditure incurred. This is in the knowledge of the MCA. But yes, this is the law as of now. As of now. Because the discussions have been there. Even the MCA have discussed a few times that this CSR expenditure should be allowed as a deduction. Because it is regulatory, it is allowed, the expenditure has to be made. Has to be made as per the Section 135 of the Companies Act. So mandatory contribution still not allowed as a deduction. But yes, this is the law as of now. This is the law as of now. Right? And thank you very much for sparing your time and going to this virtual national conference. And my heartiest thanks to the whole committee. Any questions if they have come, Sonali ji?
Thank you, sir, for taking up the session, agreeing to come here, and quite a comprehensive and detailed discussion on income tax, taking all the aspects and even touching on GST. All the questions that we have received have been already answered by you, except one you may want to discuss. That is whether these discussed IT benefits are available for companies availing lower rate of tax at 22%.
I just talked, no, not allowed. In my last slide, I talked about that only. That 22%, 115 BAA and 115 BAA is 22% and 15% is 115 BAB. So chapter 6A deductions are not allowed, so they won't be getting benefit of a teaching. So that is a loss.
That's all. Yeah. So thank you, sir. Thank you.
Thank you very much.
Hope to hear from you again, because it was a very good discussion. Thank you, sir.
Thank you.
Thank you. And thank you all the participants also for being with us. And we hope to see you tomorrow again. Our session will start at 12 noon. So thank you.